Good morning, ladies and gentlemen. This is Clueless 8 and the pre-market commentary for March 28th, 2016. Being a holiday family weekend with the Easter weekend, I was unable to do the advanced coaching sessions yesterday, but will be rescheduled for tonight, somewhere around 8 p.m. Eastern Standard Time. I would say 7 to 8 p.m. Eastern Standard Time. I'll announce that later. Let's get straight into the charts a bit. We have had some tremendous successes in our style of trading. What you see in the background is the S&P 500. And I'm not putting the dynamic E-minis in there right now. I'll put that on the next chart. Just a couple of very important observations. The biggest education teacher in life is experience, and I don't think I need to remind anyone on that. But what we do with our experience, how we translate into positive energy or negative energy, and how we are constructive with it, i.e., learning from our failures and rejoicing in our successes, that's where I believe that most humans, and that includes myself too, at certain times, of course, but I would say majority of traders go wrong. The markets are mathematical beings. Algo HFT programs, which I've talked about incessantly. I've published and posted some fantastic articles on it. I've explained it in my video casts. Are really what dominates the market. When they want to go to a certain number, they'll get there. It doesn't matter how they're going to do it, but they'll get there. What I tend to do, which I think I've been very successful in, is pinpointing some very tactical precision levels, which and through and of course showing the dynamics of the internals and how they work in conjunction with the externals, which is basically the chart that you're looking at, the S&P 500, and the internals. The simplest one that we track is obviously the stochastics. This is the daily chart, mind you. And sort of the correlation between the internals and the externals is what makes the Clueless 8 trading service and the precision targets so accurate and precise. Now, how we get there within a certain time frame is where volatility comes in. I know I've mentioned this before, but it's very extremely critical for us to understand that if there was no volatility in the market, then every single forecast within the exact time frame that I put out would have happened. But that's not the way life works. In order to get somewhere, you have to do the twist and turn. You got to brake, you got to accelerate, and that's what trade management comes in. Trade management is not something that I can teach specifically because it depends on a personality trait and the cognitive biases of individual traders, what their risk tolerance is, type of capital they're dealing with, how they can handle stress, whether they're patient in letting a trade work through, whether they understand the short-term, large-scale noises or fluctuations in the market in many cases mean nothing but just that. My content that I deliver on a very timely basis, and that's why it's so critical, specifically, especially for the newer members and free trial subscribers, to go through every single one of my comments and and posts on the Twitter real time feed because that's where the meat is. Okay, it's live, real-time, actionable service. So end of the day, if you review that, you're gonna see how the pattern plays out. Now, just because I say something's gonna do what they're gonna do, it's not gonna be that way. Maybe it gets there a bit later than where we think. Maybe the bus and the train arrives a bit later at the station than what we think. But the reality is, it gets there a lot of the times, and especially in dramatic moments where the markets are opening down a couple of hundred points, or when the markets are opening up a couple of hundred points. My comments and posts and the suggested guidance, that's the best way to put it. I know I brew suggestions, you decide what you want to do with it. My suggested guidance on that front has been extremely powerful. I have had tons of comments from traders who said the biggest thing they've ever learned from my service, one of the largest things other than all the tactical stuff, is being calm through the storm. And that's what gets you to the other side, and that's what makes your accounts grow. It doesn't mean you're not going to have losses. It doesn't mean you're not going to caught into something that you didn't expect, but it also means that you can stand up on your feet right after that and make up the losses and go forward much more. Confidence is contagious. It's a very powerful asset. So you got to develop that mental confidence. Like I like to say, talk to, discover your amygdala, okay? Look that up. And that's part of your brain, which provides you with that thing. It doesn't mean that stress is bad. Stress, I'm always stressed in a positive way. I'm always worrying about what's going to happen the next day because that's life. But that stress has to be translated into positive energy. That'll translate into better trading. That'll translate into you understanding the charts better, and you have to spend some time and a few pennies to join the advanced coaching sessions and really learn a lot of the stuff. Everyone who's taken it has benefited. So let's go straight into the technicals here. We're in the last leg of this journey here, meaning this is the end of the first quarter. Okay, I've mentioned this before and I'll mention it again. So end of the first quarter, you can look at the calendar here on the right. So we got 1, 2, 3 days left. There's literally 4 businesses, including today. 1, 2, 3, 4. So there's going to be a lot of tactical volatility, which in my opinion will be resolved to the upside. Now, window dressing is going to come to an end, I believe, sometime by the 30th. That basically falls into Wednesday. Okay, I don't think there's any massive window dressing. Of course, there's portfolio markups on the last day of the month, which is March 31st. But you know what? If you really want to be somewhat disciplined, you don't want to be rushing in and buying tons of stuff on Wednesday, thinking that 31st is going to be a great day. But then at the same time, keep in mind, this is the end of the quarter. There's going to be a lot of portfolio adjustments. So there's going to be selective markups, no question about it. Selectivity is the key. And I try to do my best in selecting the stocks which are going to do the most, are going to deliver the most powerful moves up and down. Um, so bottom line is the bias is upward for this week, but you have to keep in mind that window dressing will cause absolutely random volatility in certain stocks, and you'll wonder why that stock is not up when the markets are up. Okay, so far futures are opening up right now. So we're good to go. There's a bunch of very powerful numbers that came out of China, so it looks like the tide might be turning there. There's other articles that I put out there. That's not just for fun and games. Okay, those things you have to read if you really want to know how to drive this car, which is the navigating the financial markets. So go read through them, and there's a bunch, there's stuff in there which are actionable in a way that they will help you manage your P&L, profit and loss, and your portfolio. So taking a look at this very simple chart here, this is a daily chart. You can see the pattern symmetry that I've been showing for a very long time. And as a reminder, I did say clearly at the bottom of the market on Friday morning that Thursday morning, that the day before Easter, don't mess with the Easter bunny. And I was dead right. And it translated into some very large profits on certain selected stock. You all know that. Amazon is case in point. Okay. So bottom line is, at this point, the fund managers are going to try to dress their portfolios up. That's what window dressing is all about, so that they can add some powerful stocks, which have been the winners mostly in the first quarter of 2016, so that they have better alpha or excess returns on their portfolio. Their clients say, "Wow, you're a genius," and they send them more money, or they steer themselves towards that. That's just the way the game works. Okay, everyone does that in business. You do it yourself in your life in many different things where you want to show your best face forward, best face, and what do you call, put your best foot forward, and that's exactly what fund managers do. So we're not here to draw the philosophy of whether it's right or wrong, but it causes volatility. So saying all that, upper end of the S&P 500 clearly is around 2070 level. If we blow through 2070, then obviously this is what I'm looking at as a major tradable top, and that's around 2081. Okay, I'm not the only one saying it. There's a lot of powerful guys who were very decent, very good technical traders, have mentioned the same thing. Saying all that, this is the ultimate. This is 2104, massive distribution at this level. These are the two major distribution points, okay, or supply points if you want to put it there. Big selling happen at these levels. So the first one is 2080, very easy to see. What we're doing here is creating a consolidation channel. What you're seeing in front of you right there is a reversal hammer. You can clearly see that was Friday. So that's a hollow candle reversal. When you get a hollow candle reversal, you really don't want to mess around with it, because a hollow candle bullish reversal is equally powerful as a hollow candle bearish reversal, similar to a spinning top naked bar. Okay, this is the opposite way. Now, I know there's light volume. You can draw all kinds of inferences on what's wrong with the market, but they've been trying to do that since 2009. There's a lot of things wrong with the market. But how about the fact that China delivered numbers over the weekend, which were much stronger than expected? So obviously the markets are going to go with that. In my opinion, the biggest risk right now is the political risk in our domestic situation. What's going on with the elections? Wall Street's, I don't want to get into it too much, but there's a lot of unease and as to the way things are playing out. Um, and of course, the terrorist act factor is a big factor in the global markets. So there's risk out there, believe me, no question about it. Very powerful reminder: April 13th. JP Morgan starts off the earnings season, and I believe, as I've said it before, that this rally most probably can stretch out towards the first week of April, going towards the first part of the second week of April before tax day. There's going to be some heavy duty selling before before April 15th. And I'll be honest with you, that's pretty much when JP Morgan is delivering the numbers. So if bank numbers start to come out much weaker than expected, and I don't think anyone's expecting anything that big, then you're obviously going to, you know, but I think April is going to, be April showers, they call it, right? So I think it's going to be a weaker month. So let one step at a time. So we have to, again, don't get uber excited about things here. You got to have all tactical plays. That's all I've been doing. Tactical trades, swing trades, holding on to a bit. And that's just the way to go. So looking at this picture here, this is a consolidation channel. You can see that clearly. There's a reversal hammer. So logical technical analysis, if there's logic ever left in the markets, thanks to the algo HFT programs, which completely manipulate and dominate and screw up things. But saying all that, at this point, so this is the zone you're looking at as max move, right? 2060, upper end of the thing is 2070 and 2080. So this is max move, massive distribution here, and then you do this. So I've shown this before and I'll show it again. So let's say we get up here to the 2080 level, and then we do this dragon bullish again. So if we do this dragon bullish again, then we get up to here, and this arm, I don't know if I'm running out of room here, so there'll be a smaller, there'll be exactly this pattern. If somebody wants to believe in exact pattern symmetry, right? Which happens, just the way it goes. So saying all that, then we get to 2100, whereas I think is probably going to be one of the best shorts in a long time. So saying all that, I think this pattern is what's going to get created. What's very important for people to keep in mind, and I did show that very clearly weeks ago, if not last week, but even earlier than that, is 2020 is a very important level. If we break 2020 on the thing, you looking at the chart, you won't be able to tell much. But in my opinion, it's this 2020 level you're looking at on the S&P 500, and then this level here, okay, where was a sizable bounce of 1992 would be the key factor in whether or not this trend can continue. So, below that is 1968. So as long as we see these 34 and the 50-day moving average, this is not rocket science. It's a question of how you visualize things and what you do. So as long as you start to, these keep on creeping higher, the market uptrend remains. Now, here is something from a risk standpoint, bearish standpoint, which I want to point out very, very clearly. We have come a long way, no question about it. Here you have the highways, right? Here you have the highways of the 34 and the 50 moving average. People who have been working with me, taking the sessions and all that stuff know exactly what I'm talking about. Then you have that big crossover, just the way you had a crossover here. So once you got that crossover, you get a move which probably lasts for another 1 to 2 weeks. So we had the crossover here. We had the crossover here, and this move has lasted about 2 weeks or so. So bottom line is there is going to be mean reversion. What does that mean? A lot of you know, a lot of you, who probably don't know. Well, it's not that hard. The more you move away from the moving averages, these lines here, you are going to revert to the mean. That's what I'm talking about, that if we continue and let's say get up here, these lines are obviously going to be stretched up. So at that point, the 2000 and 1980 level on the S&P 500 become the retest centers, because there is going to be reversion to the mean. Reversion to the mean doesn't mean we're going to fall exactly and kiss the rising moving averages, which in the context of a rising market is a-okay. Might feel very ugly for people who don't know what the heck they're doing, but for us, we know what we're talking about. So we will short this move, no question about it, as if, not, I don't know exactly whether it's going to go there because there's a whole bunch of lines which are moving up very sharply. So there's as they're moving sharply, these are all become support levels, retest and support levels. Okay, I'll be monitoring a whole bunch of stuff on the internals, not just the stochastics, to figure out whether or not this is going to be a substantial pullback or whether it's just going to be a retest. That's my job to do, and I think I do a pretty damn good job of alerting all of you on that stuff. So saying all that, the standard deviation now, meaning how far you moved away from the moving averages, is almost equal to where we were here. We had moved away from the moving averages at this point. If you look at this distance and you look at this distance, we're obviously stretched. So stretch doesn't mean we're just going to get up and collapse today. Stretched means, as I've explained, end of the month window dressing, possibly a little push towards the first part of April. But any one of these days, we could have a 200-300 point drop. No question about it. So you have to be on your toes. You have to manage your profits. You can't be doing those wowza trades where you leave all your profits on the table and then you turn your head and there's a huge sell program that comes in and erases everything and you feel like, what the heck are you do? And I know it's happened to a lot of you a lot of the times. Okay, you get too greedy, both on the downside, but primarily on the upside, and you get completely decimated. And you know what? I'd rather be early, a little bit early. I don't want to give away most of the profit by selling too early, but I'd rather be a little bit early, and that's why these sessions are these commentaries are important, as well as the specific advanced coaching sessions, which will be held tonight. 7 or 8 p.m. Eastern Standard Time. So people who are not enrolled and wish to participate and really truly learn this business then should do that. They sign up on the advanced coaching session link under members area. So bottom line is that we are looking at this zone as where the markets want to get to. And the pattern symmetries here dictate that we should have a big thump here, which will probably go like this and then move up towards 2100. And in the meantime, that would create the mean reversion or reset that's necessary. That means we're going to head back towards the 2000 level. And when you fall from 2000, let's say 60 or 2050 or 2036, that we closed that on Friday, all the way down to 2000, you're talking hundreds of points that the market pulls back. All of a sudden, you have the idiotic media come in and say, oh, this is the end. This was just a figment of people's imagination. In the meantime, we're all making some sort of money, right? In the meantime, if you read what's happening on StockTwits, other trading forums, and even I put one up there where the guy said, that's it, the Easter rally's over. You know, these guys are sitting on the sidelines. I don't know what they look for, what they want, but that's the cognitive bias. When your brain, when that little monkey in your brain takes over and it tells you exactly that you can, that's it, you can, this is all bad, it just can't happen, and it keeps on happening, that's what it's all about. And the other thing to keep in mind is that we are at a point here where there's so much money, trillions of dollars, are still sitting in money market accounts. And not doing what they're doing. So that's the S&P for you. I mean, not coming back into the market. People say, and I want to repeat this over and over again, people say, oh well, there's a buying panic. There is never a buying panic. Have you ever had a buying panic where you're forced to buy? No. You're like, oh boy, missed it, I'll wait around for it. And then a lot of you actually have learned well, and you buy into the surge and you sell quickly, or you wait for that tactical pullbacks that I keep on showing, all the levels that we talked about today. And you do it. But most of the people out there, trust me when I tell you, they're sitting there, grapes are sour, and there is no buying panic. And mom and pop is not even in the buying panic zone. All right. That takes years to develop. And then they say, oh, yeah, market's great. And by that time, the market's higher. It's in a topping process. So saying all that, that's the sentiment part of it. A significant number of sentiment indicators that are still clearly showing that no one's really buying into this market. Okay, when you look at these type of moves, which are tactical moves driven by machines, okay, the plunge and the move, it happens on, selling always happens on very high volume. Okay, because everyone's panicked and they all want to sell and get out of Dodge, right? And call up the mutual funds guys, put me in the money market fund. But on the buying side, they're like, oh, well, I'll wait around for another drop to 1800. It will come, but by the time it comes, they're not going to do it. So that's why the volume is low a lot of the times. Believe me when I tell you, okay? Because no one's really chasing the market higher, and it's going higher, bits and pieces. That's it for now. Thank you for listening. I kept it simple, and I'll see you guys tonight.